Good morning, people. Good morning, everyone. Hope you're all doing well. Um, it's Wednesday, June 12th, so we keep moving on with the days. And today is a very big day in the markets, a very big economic day, as this morning, right, we already had that inflation data, that CPI data. Markets exploded robustly higher, honestly, leaving my S&P 500 futures here on the Sierra chart using CQG data feed in just a massive gap where obviously there was a quick expansion, but it happened so aggressively that my data froze. So this is what I'm left with. Now, the CPI that came out today is also coming out on FOMC day. We've got the FOMC in the afternoon, where we have the Fed's funds rate and the Fed Speaker Jerome Powell that's going to be coming on the wire and giving us a breakdown of what is going on with the expectations for future rate cuts. Now pricing in 2 rate cuts this year after the CPI data comes out. So everyone's bracing, traders and investors alike. We've rallied very significantly here off the the news here pre-market, sending things into new all-time highs, both Nasdaq and the S&P, after yesterday's pretty aggressive rally in Apple specifically, which helped a lot of the case for the upside momentum in these markets that closed on a new high, right? And we continue that momentum, and will that momentum continue yet again for the third, I guess, round with the FOMC? We'll see how that shapes up. So many people are bracing for this, right? Double whammy, as they call it, as the Federal Reserve will announce its monetary policy decision this afternoon with the expectations of keeping rates as is. Hours after the CPI release. So normally when the CPI comes out on the same day as the FOMC meeting almost gets almost all the market weight, right? So, but we're not sure this time, says Steve Engerland. So the CPI, it was scheduled this morning. We'll take a look at what some of those numbers are. I'm looking at Financial Juice right now. And the U.S. core CPI month over month, the expected was 0.3%, the prior was 0.3%, and what we got was 0.2%, so a more dovish number. The U.S. core CPI, the year over year, prior we had 3.6%. The expected was 3.5, and we got 3.4, which again is a softer figure, helping markets rally higher. The U.S. CPI month over month, 0.3% was the last time they were expecting 0.1, and they got 0%. And then finally, the U.S. CPI year over year, the prior and the expected were 3.4. We actually got 3.3%. So all this dovishness just helped markets explode higher. Very, very favorable decision for the bull side of this thing. A lot of people generally surprised naturally as to the momentum that came out on this, yesterday, the last few days as we were kind of rotating, and most likely today. So we'll see how the FOMC shapes up. The markets are widely expecting to see the rates between 5.25% and 5.5% today, and will instead pay very close attention to the dot plot and Jay Powell's presser to firm up their rate outlook. With only 4 more FOMC meetings remaining before this year ends, there's an estimated between 1 and 2 rate cuts expected this year, right? And a very small chance of no rate cuts before 2025. That's, you can see that on FedWatch futures. But we started off the year with a massive expectation of rate cuts, and we're coming down to only 2 right now, as people are, well, I guess the Fed is waiting for inflation to get closer and closer to that 2% figure. So the options market is expecting the S&P to go up 1.3 to 1.4% in either direction by Friday. So this is based on the JP Morgan projections, with the possibility of the CPI outcome being reversed by Jay Powell's press conference. I think that there could be something of the sort. We've rallied very aggressively. We're into new all-time highs. So being short all-time highs is a very, very difficult task and something very hard to do. So the only case for that is if we actually start accepting distributions lower. And if I'm looking at this on the S&P 500 futures, right, there was a positive delta about 1,300 that trade at that 17. So that's a very big marker for me today if there's going to be any reversal. So I think a lot of people are kind of expecting the FOMC to reverse the CPI upside momentum move. And I don't want to constantly be trying to sell as this thing rallies. I want to be more reactive to the distributions, and for me, it's going to take at least under 54.15 to see any of that sell side press. So until then, most likely lean to the long side. Um, in terms of other news, right? Not too much per se right now. Yesterday was a pretty crazy fiasco in Apple, right? Apple seen one of its heaviest gain days post news. Well, the heaviest this year for sure, with the stock being up about 7% yesterday. 7% on Apple reaching a new all time high in just one session was something crazy, realistically. So, this was just one day after the news or the event came out that didn't look so bullish. But AI mania, and look at what we've done. So Apple is pulling back slightly here pre-market as we anticipate the Fed this afternoon. But markets are still trading into all-time highs, and at that point, you want to be very careful with the potential of a very sharp reversal coming out of the news this afternoon. So we'll be trading the Fed event with our team this afternoon, and we'll see how that shapes up. We've got a pretty solid Fed strategy. We'll post that Fed strategy this weekend. You'll see it. But we'll be opening up our live trading room right now with our traders to see how we shape up this morning session. I want to take it a bit slower going into the FOMC and very cautiously as markets continue on this upside press here pre-market. So with that being said, let's see what we got cooking into this morning and afternoon session. And I'll see you guys tomorrow to wrap up what happened with the Fed and how things played out. So I appreciate it. Thanks, guys. Enjoy and take care.